Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, in today's episode, we're going to take a look at the banking ecosystem. Now, it should come as no surprise to you guys that banks, like most other companies out there, want to cross-sell products to their consumer to get the most out of that new customer. But you might not have stopped to realize just how deep this web of cross-selling actually goes. So today on the show, we're going to break down the banking ecosystem. We're going to look at how it actually works using an example of Chase. We'll look at some of the products they offer, the pros and the cons of the ecosystem, as well as how you can use this to your advantage, as well as what you need to know to make sure you're getting the best product to fit your needs. So if that sounds interesting to you, go ahead, press that subscribe button, let's get to work. So first up, let's start out by defining what an ecosystem actually is. So no, we're not talking about an ecosystem like out in nature, because you guys know I don't really like to go outside and try to avoid it at all costs if possible. So for ecosystems, we're really talking about companies that make like a set of products that really you could have one of them, but the more products you get, they end up working pretty well together, and they almost make a walled garden of sorts, helping to keep you in as a customer and other products out because of the value they generate, all working together. So really quick here to drive that home, we're going to take a look at a tech example, do like a 30 to 45 second tangent, and then we'll come back and relate it to banking. So as you guys know here, I'm a big fan of tech and my Apple products. So if you take a look at this slide here, this is another one of my lovely homemade infographics, but you can see at the center of it, you have the iPhone. And then from there, you branch out into a bunch of other products and services. Now, the iPhone is the thing that gets you in the door. And then, of course, I can sell you other things. iPhone does not have a headphone jack. So I can sell you AirPods Pro on the right, or I could try to upsell you to AirPods Max on the left. There's about a $300 price difference between those, I think. Great, now that you've got headphones so you can listen to music, well, I can also sell you Apple Music service, which just puts it all on your phone. Great, how are you going to pay for that? Oh, by the way, I could get you a card. So that infographic shows us how the Apple ecosystem is set up to sell and tie in other products. And the value of that ecosystem with a walled garden really comes into place once you have the phone and the headphones here, like for the infographic, and the iPad, and the pencil, of course, and then the computer. And then these monitors were also designed with Apple and LG in mind, so they really just work. There's just one cable coming from the computer to the monitor there. I can stop anytime I want, I promise. But you get the point. That's where the value comes in, because these all start to work together very seamlessly and helps you move from device to device. So I think you get the point on the Apple ecosystem. So tech tangent over. Now let's take this metaphor and relate it to our topic at hand, which is the banking ecosystem and how that works. So in a quick second, we'll take a look at another homemade infographic. Now, I've used Chase as the example here, but bear in mind that all banks, especially the major banks, have this same ecosystem of products. Chase is just going to get people to click on it a little bit more, if we're being honest. But here's the homemade infographic for Chase now. So you can see at the heart of the infographic, we have a check representing a checking account. Now, if you go into branch and open up a checking account as a brand new customer, I promise you they will try to sell you a savings account and a credit card on the spot. Now from there, you can branch off into other products that you might need. So if you need an auto loan, you have that covered. You need a home loan, you've got that covered. Purchase, refinance, home equity, you name that, we have it. And then this ecosystem also branches off into multiple sections. So let's take a look now and try to break this down and relate it back to our Apple example. So if the check is the iPhone, the thing that gets you in the door, then the credit card is, again, the headphones, right? The AirPods Pro. But as you saw on our diagram, I also have the AirPods Max, which means I have headphones at multiple price points that I can sell you. I can get you the free credit card. I can try to sell you the Sapphire Reserve at $550, or there's a CSP in there at $95. So you get the point. I've got something for everyone. And then again, on the other side of the diagram, when you talk about, having a savings account, well, maybe you figure out that that savings account isn't actually that good, so you want to go into You Invest. What? You don't want to do You Invest? Well, I have wealth management I can sell you. We'll invest for you and then charge you a fee. If you outgrow your checking or savings account, I can sell you Sapphire Banking. I can also drop that down into Chase Private Client, which has the Chase JP Morgan Reserve card as well for $550. And on the other side of the lens, I also have business accounts. So if you want to branch out into opening your business, I've got business checking, I've got business cards, free ones, and a $95 annual fee one. And I also have some hardware that you can use as well to help run your business and take payments. So all of this comes together to really make it harder and harder to break out of that ecosystem once you're in it. And the interesting part here is no matter where the customer turns, Chase has a product for them. So you really don't run the risk as a bank or a company of the customer actually outgrowing you. Again, you can see that progression through credit cards. Many of us go through it ourselves. No annual fee to a little annual fee to a much higher annual fee. The same with the investing stuff as well. And so from a banking and company perspective, this ecosystem is pretty important because it's very expensive to get a new customer, go through that customer acquisition process. And once I get them, I want to get my money's worth out of them. I already have you in-house, so to speak, in the branch if you're actually opening up an account in person maybe. And it's much easier to sell you something. I know when I go through and open up a lot of my bank accounts, a lot of these guys will end up calling me back and say, hey, would you like a credit card? You're instantly approved. No hard pull necessary. It's also because these banks, once you open up an account, they now know a certain level of information about us. They know where you live. They know your income within reason. They can see your deposit habits. They know if you're a good customer or a bad customer based on, if you've been overdrafting, making your payments, things like that. So they can kind of look internally and see what they want to sell you. Very similar, they can see if your income starts to go up or your deposits start to go up. They can slot in a wealth advisor to give you a call or some advertising to try to get you into wealth management. So it all really comes together, and you just go cross-sell really makes a lot of sense on the customer or assuming on the banking side of things. So with that being said, that was how it works for the bank and why the bank sees so much value in this. Now, what are the pros of the ecosystem for the consumer, for ourselves? Well, in the Apple example, we talked about how all these products come together to make life easier. Again, hooking up these monitors that were made by Apple and LG, to the MacBook Pro, it's just one cable from the monitor over my shoulder there into the laptop, and then one more to hook the monitors together. So you're talking about two cables total, no buttons at all, one cable to power the whole thing. So that's pretty simple, just buying the ones that they already made. Now, yes, other monitors will do this, and we'll talk about that a little bit later. But again, you can see the simplicity there. Same with your headphones just showing up on multiple devices, and even though you've only paired it on one. So the pros for the banking ecosystem for the consumer is one, it is simplicity. Everything is built to work together. The biggest use case for this is the Chase trifecta or the Chase superfecta that we all know and love. So it shouldn't be a surprise that all the Chase branded cards, the non-co-branded stuff, works together and you can move ultimate reward points between the two. They're all specifically designed to have, categories that complement each other so there's not a ton of overlap. And this especially comes into play under the business side of things. You see, inside of Chase or most banks, personal and business are almost two separate branches of the bank. Except for one thing, the credit cards. Now, if you wanted to move credit limit from a personal to a business card, you can't actually do that, even though you can move credit limits from personal to personal. So Freedom Flex to Freedom Unlimited, for example, or Ink Unlimited to Ink Cash, you can do that. But you can't do that from business to personal and vice versa. The one thing you can actually transfer between the two cards is ultimate reward points, which really doesn't make much of any sense, except for they do want to have a common thread between those, because now it also all of a sudden makes sense. If you're Chase Personal, you might want to go Chase Business because there is that tie-in. So with Chase, that's the major benefit. Now, additional benefits, if you filled out applications for other credit cards, as I'm sure a lot of you have, once you have an account, your information autofills, and there's actually not that much to do, just to click the disclosure agreements and submit your application. It's not like a brand new application every single time. If you were to get a mortgage or a home loan with Chase, you don't have to provide as much documentation. For example, Chase already has your banking statement, so you don't have to go, log into another bank through Plaid, prove you have income through to that mortgage lender, because Chase has records of all your statements, things like that. So the process becomes a little bit easier, and they already have a lot of your information again to pre-fill, so it does save you some time, kind of making you wonder at least, well, why would I go outside to Bank of America when they have all my info there? However, that's not to say that the banking ecosystem is all sunshines and rainbows. Much like the Apple ecosystem, you definitely end up lacking some things. So for example, Samsung phones, you can actually take some wireless charging headphones, put them on the back of the phone, and then they will actually charge the headphones. You cannot do that with Apple. That's not exactly a new feature. So the point here is that when you commit to an ecosystem, or I should say overcommit to an ecosystem, you do miss out on some stuff, and in fact, you can actually lose sight or not even know what other options are out there. So back to the banking example now, all the banks are basically selling the same products, but you don't necessarily know the nuances of every single product, right? So if you were just sticking with with your Chase savings account, then you might think that's fine, but in actuality, Chase pays 0.01% interest, which is just abysmal. You might not even realize that Ally Bank is over there. I think they're at 0.5% right now. That's just where interest rates are at, but in times of normal interest rates, Ally's up in the 2 to 2.2% range, which is really good, and Chase stays at 0.01 no matter what. So as a result, you're now leaving money on the table because you don't even know that's an option. And Chase doesn't really have any interest in changing because this works for them, and a lot of their customers, again, are so locked into the ecosystem because there are benefits that we just talked about, the simplicity, the ease of use, so they just don't look around. So that's not to say that ecosystems are the end-all, be-all, or amazing, though they do have their benefits. You just have to be careful. So now that we know about ecosystems, how they work, the pros and the cons, what can you actually do? Well, I prefer, instead of the term ecosystem, we should actually be looking at building out a good workflow for yourself. Workflow is almost becoming one of those buzzwords right now. The workflow is essentially just saying, what are the tools I need to help me work and complete my work as quickly as possible in an efficient and effective process. So we're going to jump back to a technology example, then we'll relate this to banks again to close this out. So this setup here behind me, it's probably like 75-80% Apple setup, but again, because we don't want to be locked into an ecosystem, we want to make a workflow that works for ourselves, then you can't be afraid to venture out and see what's going on. So for example, this here is a Logitech MX Master 3 mouse. Apple makes mice and Apple makes keyboards. I don't really love them that much. I like these better, so much better. Yes, they're more expensive, but you want to find the tool that works best for you in your workflow. Now, not to go too hardcore with the tech example here, but when you talk about this, for example, if you bought the Apple version, then the Apple version has, gestures built in that you can use to better control things. However, other companies, outside companies like Logitech here, for example, they know that, they want to be able to sell mice to people who use Mac or PC, and they know some of the things they have to overcome. So as a result, this still connects via Bluetooth. I can still switch between 3 different computers if I want, which covers your Mac and your iPad for sure. And when it comes to gestures, they actually have a built-in app that you can get, which would make your own custom gestures for this device. So as a result, you can plug this into the ecosystem, break through that wall that Apple has set up, and actually you'll get more benefit potentially for this if this fits your workflow. So that's kind of an example in the tech space. Now in the banking space, the same example kind of applies. We talked about the savings account, how Chase savings account isn't that good. Well, there's no rule that says you have to leave all your money with Chase. Set up Chase, have your checking, or just have your credit cards with them, because the trifecta is really great. And then open up an Ally account for your savings account. You don't actually have to have a single bank account with Chase if you don't want. You could just have credit cards. So that's why I say it's less about locking yourself into an ecosystem and committing, and more about building out your financial workflow, if you will. So anyways, guys, that's going to do it for this one. If you liked it, drop me a thumbs up down below. If you found it particularly interesting, then consider subscribing to the channel. Posting content just like this every Monday, Wednesday, and Friday, of course, with the Sunday recap episode. That's all the news you can use in the week that was in credit and finance. My question for you guys is, let me know down below what you think of the banking ecosystem. Do you like being in one specific ecosystem, not branching out? Do you prefer to mix and match your products? And what are the things you look for in an ecosystem or multiple products to help them fit together? Love to get your thoughts on this topic. But anyways, guys, that's going to do it for this one. As always, thank you so much for watching, and I'll talk to you in the next one.